Good evening, everyone. I hope you're all having a great day. Great start to the week. It is Monday, February 13th, 2023, and we'll be breaking down SP 500 E-mini chart down from the monthly, down into the weekly, down into our daily. Today was a very interesting day as the algorithms are looking to algorithms, people, traders, all the way around. We're awaiting a number, right? We have CPI data coming out tomorrow. CPI data that will possibly be a catalyst for a move to the upside or to the downside for the market. So we'll see how it plays out. So far on our monthly, I'm going to review my monthly balance that I have or the monthly channel range, however you want to look at it, however you want to identify it. So far, monthly balance high for me, 43.2750. That is where my monthly balance is. We need to break that high in order for me to say that the monthly is one time framing up. However, if you say that this 41.41 level, December's high, was your balance high, you're not wrong, right? You could say that that's your balance high and you're one time framing up right now, attempting to find acceptance over that 141 level. Last month was an inside month. This month, you're looking to find acceptance and extension above that 41.41 December high. If you find acceptance, you should have no issue getting to my target of 43.2750 and above that, where I will begin to be one time framing up. So all I'm doing is I'm waiting for more confirmation that the uptrend is more likely to be the scenario versus failing here and rotating back into the lows. Um, but so far, this market this year has turned out to do some different things, right? Trends changing a little bit. We've broken this downward trend line. Things on the intraday, the shorter time frame, daily, and the intradays are starting to look up as well. So, monthly balance right here on the screen, 43.2750. High 40 or 35.02 is the low, trying to find acceptance over 41.41. Go into our weekly. Last week was an inside week. All right. We're attempting to find acceptance over that 41.41 level. Didn't find it the week before, or last week, didn't find it the week before last. Last week was an inside week. So whichever way we come out of this, to the up or to the downside, should have some pretty good extension behind it, right? We were one time framing up 1, 2, 3, 4, 5 weeks in a row. Because last week because it was an inside week, we called it up to balance. If we take out last week's high and the previous week's high, we will continue to one time frame up. However, if we take out last week's low, then we'll stop one time framing down or one time framing up and be attempting to put ourselves into a 3 week balance. So as of right now, we're grinding up, taking back some of the sell tail from last week, attempting to push towards the highs. As today was a pretty good start to the week, and we'll look at that on the daily. But just keep in mind, after breaking out of this balance down here, we're one time framing up 1, 2, 3, 4, 5 weeks, 6 if this continues to the upside. Trying to find acceptance over 41.41. That is a huge level. 41.41. Line in the sand for me. But you can see even on our weekly that we are trying to change things here as our downward trend line has been broken and we're creating somewhat of a newer trend, right? Setting higher highs, higher lows, that type of nature. Either A, this is setting up for a much larger bear flag than what most people are anticipating, or B, the market is truly changing and we're grinding up higher. Either way, we're going to trade what's in front of us, and what's been been happening in front of us is the market's trying to go higher. So that's what we're going to be looking at. Daily. Excuse me, that's not the right one. Daily. So our daily has just come back into a 3 day balance, right? Last week, remember, we took out our balance low. We got one time framing down 2 days in a row, 1, 2. All right. Didn't find much extension, got near the 20-day moving average, but did not get below it. And then today, really strong looking candle there on our daily, Today was a strong day in general, and I'll show you that on the intraday. But we broke the balance low, one time frame down, 2 days in a row. So we were taking out previous days' lows and setting lower ones, right? And then today we come in, we take out last Friday's high, putting us into a 3-day balance. So I'm gonna go ahead and mark that on our chart here. Today's low, or Friday's low was 40.6975. 40.6975. Go ahead and mark that. And that will be our initial 3-day balance low. And then this high from last Thursday is 41.6675. 41.6675. That will be our 3-day balance high. 3-day balance high there. So now that is what our balance looks like, right? So this day, and today, 3-day balance high. We take out last Thursday's high at 166.75. We'll begin to one time frame up and be looking to come out of balance to the upside, potentially get back up near the highs and fill this gap up here that we've been attempting to fill for quite some time. And maybe in the meantime, find acceptance above that 41.41 level that I've been talking about. So far, look at the daily. We've been setting higher highs, higher lows, higher high, higher low, higher high, higher low. Will we set a higher high? Right? That is the question. However, CPI data tomorrow can alter that. We can either move off some pretty good volatility to the upside, coming out of the inside week, right? Remember, last week was an inside week. Inside week, come out of that to the upside with the CPI data as a catalyst will look pretty good. Or do we come out and break out of our balance to the downside, get below the 20, and go test these other daily lows and get to the 50-day moving average? That is all to be determined, but we'll trade what's in front of us tomorrow. So let's go ahead and look at our 30-minute time frame and review what occurred today on the intraday, right? I had a decent day as far as trading goes. I'm not going to review all the trades because most of them were kind of break even scratch trades. A few of them I shouldn't have been involved in. I was definitely chasing this move most of the morning after B period. I was chasing and C. I was chasing. It was just trades that I should not have been taking, and I got caught on the short side a few times. Got caught on the long side a few times. But the best trade of my day was in H period, and I'll review that. But first off, let's go ahead and review what happened early on this morning. All right, so in A period, we opened up with a gap up here at 41.07. So we opened up above the 41.0425 high of day from Friday. So we had a small gap, about 3 points worth. That backfilled. We got into the previous day's range a little bit, but not by much. And then we shot back up, filling the small set of single prints from that large trend day down on Thursday. So we filled this set of single prints that was an upside target. All right. Had we found acceptance in previous days' range inside of Friday's range, we would have tested that 11Y point of control down here at 40.87, but that did not happen. We opened up above, and guess what? We hit those daily targets I was discussing on Friday of the single print fill. If we get above that, then your next target is the upper portion of the middle distribution where the single prints start at 41.25. Well, after we had filled those set of single prints, buyers had some things in their corner, right? Initially, they opened up with a gap. They had higher value, filled the gap, but we still held value. Then we pushed up, right? So we're attempting to find acceptance into the middle distribution from that large trend day down. Didn't get much, didn't get much pushback on it as B period pushed up. So now we're one time framing up, and we create a small set of single prints in B attempting to fill the set of single prints from that trend day down on the 9th, but didn't quite get there until C period pushed up and filled them. So now we've one time frame up because we took out A period's high, right? So that means we're one time framing up, taking out previous time frame's high. So we set a higher high on the day. Same thing in C period. We set a higher high on the day. So we got above the middle distribution, attempting to find acceptance into the upper distribution, which was E's low to A's high. We found that later on in the day. But C pushes up, we take out the initial balance high because the initial balance is the first two time frames, high and low, right? So A and B's high and low. So A's low and B's high in this case was the initial range, initial balance that you were looking to break out of. We broke out of it to the upside in C period, continued a one time frame up, creating another small set of single prints, and then grinding higher in D. Had a little bit of backfill in E, but had a reversal bar, pushed up, set new highs on the day. Got to that afternoon rally high, which was our next destination, 41.42. We battled back and forth F, G, and H before finally rolling over, giving back some of it. As buyers up here were not getting paid very well, not much extension in F or G period when we set new highs on the day. Each time we came back in, we created a wide point of control up here as well early on in the day. So we had a point of control to rotate back down to, had two-sided trade. So in H period, when we pulled back, you're just getting rid of the weak longs that were up here buying that weren't getting paid very much. They got their positions and rolled over. That's when I took my good trade. And you can see we rotated up, got above afternoon rally high, finding acceptance into the upper distribution, and began to one time frame up again in I and in J, but J was a reversal bar, came down because after setting a new high on the day, there wasn't much tempo or volume. We weren't attempting to go triple distribution because right now we're only a double. They attempted to push this thing up to a triple distribution by creating another set of single prints in J period, but because there wasn't much volume or tempo to push this thing higher, showing that buyers were not really present up here. So we sold off, inventory rotated down lower to the point of control, and we broke lower down, right? K period pulled down, and then L period pulled down into the small set of single prints before reversing, and M period, K, L, and M, Curly, Larry, and Mo. So Mo pushed up back near the high of the day, but didn't quite get much further. So overall, P shape for the day, showing short covering, right? P shape. If you look at it, it looks like a P on our 30-minute time frame, right? A little bit of a P shape. Not a lot occurred. Some good opportunities. Best opportunities, in my opinion, were in E period, H period, and then in L period, excuse me, E period, H period, J, and in L period. Also, a pretty good opportunity in K as well, um, to take longs and shorts. So you could have taken a really good long in E period against a set of single prints. Let me go ahead and mark those real quick for you guys. That way you know what I'm talking about. Bring out the horizontal here. 23.25 is where this one fills. So let me mark these single prints out for you guys. That way you can see. So single print, all it is an intraday gap. It's kind of like you have a daily gap. We have gaps in our intraday as well, or where poor structure would be located. So a lot of times you could find resting bids or resting bids or offers in those areas, depending on the context of the day. So we had a small set here. And what one time frame and what single prints means is it's just one time frame that went through that area, through that price point, uh, like everything else, here is a double print. So from A's high to B's low is a double print. So 23.25 to B's low of 19. That's a double print. And then you have the single prints from 23.25 until 26.25, because after 26.25 and up, it was a double print, right? So two time frames went through those price points, whereas in B period, only one time frame went through those price points during price actions. All right, single prints start here. Why do they start here? Well, because if we were to pull back into it, that's when you would look to find bids in those areas early on. And it fills here. So kind of like tracing back. So you would want to fill in this structure here. Same thing here in C period. We had another set, which was a good long opportunity. And I'll show you those long opportunities real quick. Let me get these marked out. Bada boom, bada bing. Kind of like support and resistance, but that's just, I don't like using support and resistance terms because it's not as accurate, in my opinion, as it could be accurate. Say that correctly? All right, and I'm just going to mark where they were initially in E period. Well, for example, in D, so you see here in D period how from B's high to D's low at the time, if you're paying attention to the right hand side of my screen here, from B's high to D's low, there's only one print in this whole area, and that's in C period. So from 41, 33.75 down to 41.29, that whole time frame there and that whole range, there was only one time frame that went through that area. Then in E period, we pulled back, filling in some of that structure. So now single prints went from starting at 41.33.75 to now they start at 41.30.75 because we backfilled some of the structure. So it's no longer single print in that area. It is now double prints in those areas. As E period pulled back. And then finally, we hold a little bit here in B or in C period. So now it's not as much, but there is some there. And then we revisited those areas in L period. Here. Boom. So now that's where they start. Single point start. Boom, boom, boom. All right. So let's review real quick some of those trades. So in E period, you could have taken a long against those set of single prints like I was discussing because you could find bids in those areas or buyers. You could find buyers in those areas because all this was short covering, right? If P shape is for short covering, then those that were trapped short are providing the bid or they are becoming the buyer instead of the seller because they were selling down here at these at lower prices. And as price moved up, they had to cover at higher price. So that means they had to buy back those shares, buy back those contracts. So price continues to move higher and grind higher. That's what creates these single prints. That's what helps move the market. So in E period, when we pulled back, provided a good opportunity to get long. You could have gotten long, and guess what? You had a reversal bar and set a new high on the day in E. Same thing here in K period. You could have taken a long against E's low and those set of single prints, and you would have gotten paid decent on the push back up. Same thing in L period when L took out K's low, got into the single prints a little bit more. You could have taken the long against that. Your out would have been at 41.29. You're buying 41.30. And guess what? We push up, and the high on L's candle is 41.40. So, 10 points, you're risking 3. So, good trade opportunity there. and then obviously you got close to setting a new high on the day in M period if you're someone who intraday swing trades. If you're like myself, you scalp, you take it off on the move up, and that's what I did here in H period. Because early on in the day we were P shaped, we had a wide point of control, we were holding two sets of signal prints, we had a double distribution. So when we pulled back in H period, I was looking for an afternoon pullback low because a lot of times that's what occurs whenever you have um, a double distribution day. You tend to get something called an afternoon pullback low. So all that means is buyers that were up here buying weren't getting paid very well. They start to get out of their positions, and the market moves lower. So all the weak longs up here, where all the weak buyers up here, were selling off into people like myself who are waiting to buy at a certain area. And that area being, I can show you on the pullback, was the 144 and the first standard deviation. They kind of coincided at the time. And then my out was down here at 41, 30, 75 because had we pulled back, I had 6 points of worth of risk. Had we pulled back, I would have gotten out because then the market clearly would have been showing things are changing towards the seller side. Um, but in H period, we pulled back. I was buying uh, 37, 38, 36. Had a 4 lot on. Let me show you exactly where I had bought. If you look here on my 1 minute chart, so these dashed lines that you see on my screen, those are standard deviations. The blue dash is VWAP. The white line that you see is the 144 simple moving average on a 1 minute chart. And typically, whenever you pull back to those areas to the 144, you can find a buying opportunity or a selling opportunity. This is, of course, coinciding with market generated information that we have as well, right? We knew the market was one time framing up majority of the day. We knew we had single prints. We had higher value. We've been trending up all day long. So on a pullback to an area such as this 144, and I was buying down here that I've highlighted. And once you get it back above it, you continue to add to that position. Your risk reward is really good because you're buying on the pullback when nobody else wants to be the buyer. Uh, and then this thing shoots up and creates a new high on the day. I didn't take full advantage of it, but I was long a nice 4 lot of 36, 37, and 38 in those ranges. And then as this thing creeped up, got back above the 144, it popped up to 41 and 41. I took it off for a nice gain on the day, especially having been chopped up initially early on in the day on me and break even. So I took that trade. Great trade. Could have held on to it. Nothing told me to get out other than me wanting to take profit, but could have held on to it. It would have gotten about a 10-point payout on it on a 4 lot. But however, I wanted to take profit because I did not know if we would pull back and kind of do what happened here, right? This is what you call a fell of the 144 and the standard deviation. We pulled back to it, held it initially, and if you weren't scalping and you were looking to hold for a new high on the day, well, you got hurt because this thing, once it crossed over and got underneath the 144 and that first standard deviation, we sold off pretty good. And that also coincides with on our 30-minute chart here, us failing to find extension up here on in J period, and then taking out the previous time frame's lows, so stop runs, and this thing just sold off, right? So anybody that was buying was getting hurt, and that's why we sold off. But that was one good trade that I took on the day. Put me up really nicely, and I was happy with that. Afterwards, I didn't do any more trading. Obviously, there were opportunities that I described for you guys as well. I know these videos are long, but I hope you are enjoying them. I hope you are sticking around to the end. There's a lot still to review. Let's go ahead and put in our high day here in J period, 49.50. 49.50. is our high day. Go ahead and mark that. We have our set of single prints below that start at 41.30.50. They fill at 41.29. Then the next set start at 41.26.25. They fill at 41.23.25. And then we have today's low of day down here at 41.01.50. 41.01.50. Once I get this marked, we'll go over some if-then statements on these destinations. And what to look forward to tomorrow's trading day. All right, boom. All right, so we have a double distribution, right? The lower distribution is A's high to A's low. So from 23.25 to 01.50 is the lower. The upper is 41.30.50 to 41.49.50. That is the upper distribution. We also have a 9Y point of control here at G's low. So all that means is 9 time frames out of the 13 today traded back and forth through that similar price action. G's low was 39. So at 41.30 is our 9Y point of control. Almost forgot to label that. And these areas are important because it acts as a magnet. So if we open up tomorrow above today's high, cannot find much extension above, we rotate back into the previous into today's range, you'll look to trade down into the 41.39 level, our 9Y point of control, and then test the lower portion of the upper distribution, which is at 41.30.50. If there are sellers present, then you will look to backfill into this where the single prints fill at 41.29 and potentially get into the lower distribution after filling the set of single prints at 41.26.25, 41.23.25, and getting into our lower distribution. If you continue to have sellers, you'll look to see if you hold at 41.04.50 or 41.01.50, excuse me. If you get below that, then you will trade at the 11Y point of control back from Friday at 40.87. However, if we open up in the lower distribution and cannot take out today's low, the single prints will be gone, but you'll still have this 9Y point of control because it carries forward. You'll look to rotate back up to 41.39 and then test the day's high. But with tomorrow's CPI data, who knows what comes out, what occurs. We'll look to these destinations. If we get above today's high, the next daily high is 41.66.75. Then 41.68 is our next daily high. And then up here at 41.88.25. Our 3-day balance high is right here at 41.66.75. So you get above that, you begin the 1 time frame up again and potentially have good extension to get the rest of these targets on the upside. Well, that's all I got for you guys. Thanks for stopping by, ladies and gentlemen. We'll catch you in the next one. See you.